Welcome to Key Trades on this Monday the 7th of March as we wait the start of today's US session as we look to go into the afternoon trade in the European markets. First up is euro-dollar as we look ahead to one of the main features of this week, and that's going to be the European Central Bank meeting. And we're taking a look at one of the indices we're monitoring in specific is the German DAX, although it could be any one of a number of different indices we're following because it looks like there's a topping out pattern in some of these major benchmarks. And also looking at West Texas Intermediates, the US light sweet crude, on a trajectory. It doesn't look like it's stopping anytime soon. But first of all, let's take a look at this trade here, euro-dollar, ahead of the ECB interest rate decision. Yes, it's a long way off, but it is the main feature of the week, and many traders are looking to take positions ahead of that announcement from the ECB. Let's turn now to David Madden with a look at the euro-dollar chart.
The euro-dollar is under pressure yet again as traders are squarely focused on Thursday's ECB meeting. Bear in mind, Mario Draghi has been dropping major hints that there's going to be additional stimulus announced on that date. Bearing in mind, though, some traders are sceptical, seeing as Mr. Draghi, his commentary regarding at the December meeting was nowhere near as dovish as traders were anticipating. Nonetheless, the euro-dollar is back below the psychologically important 110 level, and while it remains sub 110, the outlook will continue to be bearish, and the next big support levels to the downside on the horizon will be 109.03 and 108.53. Should we move above 110 and should we see an hourly close above 110, that will be a bullish indicator, and the next level of resistance on the horizons as to watch out for will be 110.46 and 110.68.
Now that ECB trade is also one to follow when looking at some of these indices, but there is also another aspect to what's happening. That is potential topping out formation as we are here on this Monday. Let's turn back now to David and take a look at the benchmark index in Germany, the Germany 30 or the DAX.
The Germany 30 has pulled back in early trading throughout the day. Traders who have been long the market for a number of weeks have decided to book their profits ahead of the ECB's all-important decision on Thursday. The sentiment is still pointing towards additional easing from Mario Draghi on Thursday, but bearing in mind the German market, the Germany 30 has been on the rise for about 3 weeks now, and rather than run the risk of Mario Draghi not being as dovish as he anticipated, exactly like we saw in the December meeting, some traders are opting out to cash in their long positions ahead of the meeting. That being said, the trend is still to the upside, bearing in mind the DAX has been rallying for about 3 weeks now. And while the market remains above the support at 96.76, the outlook will continue to be bullish, and the target to the upside is the resistance at 99.01. Should we see an hourly close below the support at 96.76, that will be a bearish indicator, and the next big level of support to watch out for below that will be 95.76.
One of the key drivers behind the move higher we've seen in some of these equity indices has been the move in oil. And oil continues on this upward move. And is this going to give extra fuel to some of these indices? We're taking a look now at WTI.
WTI continues to creep higher, as it's been doing so since the middle of last month. The Baker Hughes report out of the United States last week shows that the number of active oil rigs in the United States has declined for the 11th consecutive week. Oil production in the United States is now at its lowest level since November 2014. Saudi Arabia's plan to intentionally oversupply the oil market and drive down the price is actually starting to take effect, as we are seeing shale producers in the United States start to exit the market or even actually curtail their production, which in turn is actually continuing to push the price of oil higher. For the time being, traders looking at WTI are going to be keeping an eye on the resistance at the psychologically important $38 a barrel, and should we move beyond that, the next level to watch out for to the upside will be $38.94. Any pullbacks in WTI will find support at $36.34 and $35.93.